I think what's really important too, and I wouldn't say a mistake of mine, but I think something I quickly realized was I think it's the name of the game for this, all cycles, but where you are in the information totem pole. It's not just whether or not you're early or late. It's like you can be late early and still make a bunch of money in this industry.
This episode is sponsored by SKALE. SKALE has differentiated itself from other layer ones by offering users a network of gas-free, interoperable EVM L1s where the user experience comes first. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. To learn more about the gas-free architecture and growth of the SKALE ecosystem, visit the SKALE Research Hub at scale.space/research.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research. Today, I'm joined by Ryan from the Blockworks research team and Effort Capital and 0x Mims, OX Mims, Ox Mims. From Blockworks Advisory, the new advisory arm for Blockworks Research. Welcome to the show, guys. How you doing?
Thanks.
Pretty good. Delegate to us.
Happy New Year.
Happy New Year. Happy New Year. So we already did because I was off for the past few weeks, we already did a 2025 thesis. So I want to do a look back episode where we do our top 5 mistakes for 2024. But I don't want to start. So whoever has their list ready, let's get started.
I'll go first. This was really hard. Not find 5 mistakes because I didn't know which of those should be the top 5. I had like a laundry list of mistakes in 2024. The first one that comes to mind immediately, and I'm sure Bach, you're going to love this, is not trading Hyperliquid, not farming that at all. My timeline was blowing up about Hyperliquid back in like October of last year. I think it actually drove like a lot of mind share from like ex-Cosmos people accounts. I don't know why, but a lot of my like ex-Cosmos people were on my timeline shilling it back then, talking about how great it was. And I didn't do anything with it. I think the first time I actually traded on it was PvP trade because of the invite link you sent, which was fun. And I had a good time doing that. Hopefully that becomes a good airdrop. But not trying Hyperliquid, not doing anything with it. Definitely a big mistake for me. Just didn't even buy a Coke bag at $4 when it first launched, even though I knew I should have. That's definitely number 1 on the list.
For what it's worth of Hyperliquid, I think a lot of people just missed it anyway. Hence why you see a lot of people posting on the timeline. And I think the people who didn't miss it just didn't sell, so they're just very happy. But I don't know. We talked about this earlier this morning as well, and I kind of got upset with Ryan and Dan. We had on our analyst call them saying we think it's overvalued. And I said, I don't think it's overvalued.
One thing I think that it was, I don't know if this is a mistake by Hyperliquid, and Boccaccio, I actually would love your take on this. And this isn't like a Hyperliquid podcast episode, but whatever, we're talking about it. Do you think it was smart to choose the EVM? Or do you think that doesn't matter?
Honestly, like I don't know enough about EVM versus SVM versus Move VM, etc. I find it like semi not interesting. If you can get SVM performance on the EVM, then it doesn't matter that much.
If you can get SVM, if you can get that kind of performance on the EVM, then it absolutely doesn't matter if anything EVM.
So that's what they're going for, which is why I think it should be fine.
Yeah, that's fair.
I think if you're a new L1 and you're not trying to hyper optimize the EVM, going for the EVM might not be the best. But I mean, that also wouldn't make any sense. I can only think of one chain that's doing that, which is Bear Chain, which they're doing their whole own thing in regards to the EVM, which is like connecting it to the Cosmos. But like every other EVM based chain now is like, we've realized that the EVM is good, but you can only get off, like you can only do so well by circle jerking how much TVL and developer resources there are in the EVM. Like you need to crank it up a little bit. I think all of the successful L2s are realizing that. I think Mega ETH is going to do really well. This is like, I'll say it on the pod. It is January 3rd, 2025. I think Mega ETH does well. I don't care about, like, I care about decentralization, but, and I found it a bit funny where they had like an argument with Keone on the pod on Bankless, where it was like, oh, like this is a node, this isn't a node, nomenclature aside, like all that stuff aside, the decentralization aside. I think Mega ETH and Base both realize that you need to crank it up, the EVM, you need to make it performant. I don't know why I started with this conversation. I've once turned into Alto, but you get the gist. I think unless you're like trying to make the EVM performant, then you should not build on the EVM, or you should not do anything with the EVM.
I think yeah, it's interesting. So like does the EVM like was the EVM a mistake for them? Like I probably not. Like you see enough teams saying that we can crank this thing up to a big number. I think short term probably not. But I think a 10,000 TPS number is certainly capped with it caps your valuation to an extent. I think it's a good place to be over the coming years, but like I don't know, I'm really interested to see what Fire Dancer does within the next, let's say, 12 to 18 months, and how that makes the juiced EVM people, like how it makes them want to move. Because of all the engineering resources out there, there's some people saying, yeah, we can crank this thing to 10,000. And then there's other people saying, yeah, but we have this thing over here, we can crank it to 1 million. And we know that trading volume is like the big determinant of these valuations. So yeah, so like near term, it's probably fine. Long term in a Fire Dancer world, like you probably get smoked.
So what does that say about like all these new L1s that are like super fast performant like EVMs, right? Like you have Monad, you have like like what Phantom's coming out with Sonic, I think. Like, are you saying that these are like more or less doomed against something like Fire Dancer or Fire Dancer Juice Solana, or no?
If they can execute on the numbers that they say it is, like what I do is when I think about these, just like simplify it down to TPS, pretend it's the only metric that matters. Um, in an ecosystem that can get devs. Discount whatever they say they can juice TPS to by 75%. So yeah, you have like whatever 2,500 TPS in a juiced EVM world, and then 250,000 in a Fire Dancer world. It's just like apples and oranges. Um, it's great for the EVM. I think there's a lot of people who want to build on a juiced EVM. I think they're going to do well short term, but I think you cap yourself long term at those numbers.
Dave, Big Dave, this is actually a question for you. We'll continue on the mistakes afterwards, but where does
Yeah.
the cause? Because I realize why would Barachain build on Cosmos as opposed to as an L2?
Yeah, I mean, I can't speak to. I think if memory serves me correctly, they did that raise in 2022. You probably know better than me, Bach. But my thought is the OP stack was not as mature, or the Arbitrum Orbit stack wasn't maybe as mature. I think it's the same reason why DYDX decided to build on Cosmos instead of building on OP stack or another rollup framework. The tech was mature enough. And I also think they probably wanted that L1 premium that I think the market has historically given them. And you can just do more things. You can, it gives you more custom design space around like what your validators can offer your users, I guess, from like an Oracle perspective. And sure, you could have them try different like type of services. You can do fancy things with like an off-chain order book and settling on chain. I don't know if you can do any of that with OP Stack today. Like I'm sure you can, but to be honest, like I haven't really done much digging into that in a while at this point.
That's fair. I think I need to look into it a bit more. I was just wondering, but I think that's a much better explanation than anything that I have thought of. So I really appreciate it.
Do you think there's like some ecosystem building premium you get from being an L1 as well? Because if you look at all the OP stack chains, apart from like Base and I guess like Optimism mainnet, and if you look at like all the Arbitrum Orbit chains, it seems like they have a harder time building an ecosystem relative to like an L1. And I think that's partially because like when you're building an L1, there's like this thought that developers might have where it's like, we can be the first like Aave on this L1, right? We can be the first of whatever. right? And I don't think that same idea is there for like chains that launch within a stack. I'm not sure if that makes sense.
I don't know. To be honest, I think one of the things that was just really unique specifically for the Cosmos, and this is obviously going to become less and less true over time, but I think having an interoperability framework is like really key. And I think that like you're kind of on your own island as a chain, but if you are connected to other chains that have some type of liquidity, then it'll be easier for users to bridge over there, and it's easier to just like jumpstart your ecosystem. And like OP doesn't have that. Arbitrum doesn't have that. Like I couldn't even tell you how to bridge the side today. I'm sure it's super easy. I haven't done it. I have no plans on doing it, but I'm sure it's just harder to do than like getting to DYDX, for example. Could be wrong though. So no, yeah, number one was Hyperliquid. Number two,
Should we comment on everyone's after they say them, or
Yeah, that's
comment
a good
on
way.
their
That's a good way.
batch?
so comment, and then next one.
Comment.
All right. It's tough to comment on Hyperliquid for me just because
I feel like it's a
It wasn't a
simple like
mistake.
it's a simple comment, right? Like you missed out. Better luck next time.
Yeah.
Try again.
Yeah. One thing I will
Well-
say is like a lot of people are like it won't happen again. I don't think like airdrop wise, I think it'll happen again. Every like 5 months we do this thing where they're like, oh, this was the last good airdrop. Next time there won't be a good one. And then last time they said this was for Jira was the big one. Grass was okay for me, but I think that's because I was like an early Reflink shiller. I think there'll definitely be other opportunities, so there will be another one. In terms of the 2 to 20, 2 to 35, it launched at 2 bill 35, 17.5x. I don't know about that one. That one's a tough one to. I think it's fine. You don't have to catch every winner.
You don't have to catch everyone, but Hyperliquid's pretty interesting in that it was number one in perps for so long.
Yeah.
Like, and we kind of saw this thing in perps where every like new perps thing went to number one and then floundered, or like got a lot of hype behind it. Then people got tokens, then it just like dropped down the list, and DYDX remained number one. Hype certainly bucked that trend, so I think it caught a lot of people offsides.
That's exactly it. I just figured that after the points program, after the airdrop, it would go down, but that didn't happen. And kudos to everyone that caught that early. I think another and maybe more like general mistake of mine in 2024. I got complacent in Q2, like early Q2, like maybe late Q1, early Q2. I was, personally up a decent amount in my port, and I stopped trying new things. And I don't think I didn't have fun on chain from Q2 to like end of Q4. That made me like miss whiff. I didn't decide to buy fart coin. I wasn't even in like the pump fund trenches, like as early as I should have been, despite knowing like what was going on. So I think lesson learned and forward looking for 2025, going to continue to look for having fun on chain, even if it doesn't generate me money, like it could. I just stopped trying things, and shame on me.
Yeah. That's number 2.
Yeah, I would say that's number two. Just like generally not trying new things and getting complacent in 2024 after like a decent run up in Q1.
What? Sorry. You said from 2Q in 2024 onward?
Yeah, I started trying things in late, like mid Q4 again, honestly. Like I really wasn't doing that much different things until like mid Q4. Like I literally missed like all of Q2, all of Q3, and like half of Q4 of like doing anything. Even like didn't even do anything on Pump Fun until I don't know, November or something.
Yeah. I feel like it's easy to get lost in crypto as well, where you're like, because it feels like if you miss something, if you just miss a week, then you're like, oh, I'm too late. And then you don't participate for 3 more weeks. And then you're like, well, transaction not dead yet, but now I've missed a month. I'm too late. And then it just keeps going on. So you're like, oh, fuck, like I've actually missed this out for 3.5 months. I definitely could have participated at some point. But you never do. And I think it's just kind of the name of the game. Like there's 15 things going on at once. I'm genuine proponent of this. A lot of people are like, oh, like if you missed X, what are you doing? there's like 5 narratives happening at the same time. Like the dominant one is AI, but if you were like focused on gaming stuff, like On-Chain Heroes was a 17x as well from mint price. Like the Genesis mint, the rings, a lot of stuff has like 10x on Hyperliquid, 10 20x on like that chain. So it's like that's, I guess, long-winded way of saying just gotta keep staying on top of stuff, and like just missing one narrative doesn't mean you miss out on all of them. Like there's like 5 of them going on at the same time at all times. All right, who wants to go next? Or David, do you have one more?
No, I was just say, just like kind of follow up with that. I think what's really important too, and I wouldn't say a mistake of mine, but I think something I quickly realized was, I think it's the name of the game for this, all cycles, but where you are in the information totem pole. It's not just whether or not you're early or late. It's like you can be late early and still make a bunch of money in this industry. And I think I early on was like either I'm early or I'm late, and it's like that's not the name of the game in this industry. There are 9 innings in a baseball game. Like it's very okay to be in inning 5, and you actually might catch, the most of the run up for the back half of the whatever that game is or whatever that token is.
Perfect. That makes sense. Any comments on that one, Ryan?
I don't know. The thing, yeah, I get it. Yeah, you can it depends on your kind of investing style, right? There's a million ways to make money. The juiciest returns in crypto are y- you the returns that you miss out on scale super linearly with the inning. I don't know how to frame it, but like the juice, you want to be in inning 1 because you just lose X's very, very quickly. Things move so fast. And it goes back to the other mistake of just like participating all the time. Like you actually can't take time off. You have to be playing these new games because that's where the very, very big gains come in.
Yeah. Darren, you want to go next? What are your
Yeah.
Okay.
My biggest mistake is I think I share a lot in common with David here, but kind of just not coping. Like I missed out on Hyperliquid, missed out on plenty of other things that like blew up. Almost every single meme coin, especially all the major ones. And I think that's largely because I discounted them, saying that they were like, silly, just like a fad, like an immature fad that would go away, something like that, right? And like, I almost feel as though like, the market's recognizing them. It's not about like, well, it's not about necessarily if you think that they're like silly. It's just to a certain extent, it's like you just gotta go with it. Um, and yeah, I guess that's my biggest problem. Like for Hyperliquid, I saw it keep going up, and I was like, "There's no way this is gonna go up forever. It's gonna crash. It's gonna go to zero at some point." And I have been wrong so far. But yeah, that was my first biggest mistake. Second biggest mistake is, I guess, just not being consistent and trying new things. So again, similar to David here. Um, but more so in the sense of like I start airdrop farming things and then I fall off of like airdrop farming. Like I've been farming like infrared on Barachain for some time, but I have these periods where I go in and out and just completely forget about it, and that's how you like lose like track of the ball. And yeah.
So the one thing that I want to kind of double click on is I see it all the time in crypto. It's like the thing went up X%, therefore it can't go up more. And sometimes that's like a good rule of thumb, and I think it's actually like a really good rule of thumb in TradFi, where markets are generally like pretty efficient. So like if something did re-rate, you're like, oh, it's up 50%. It's up 50% for a reason. Like I can't keep following it, right? Like it's either gonna stay where it is or like come back to earth. Um, it's not the case in crypto. And I think like again, the classic example was Hyperliquid, where if you like when did the token come out on Thanksgiving? Like I was like in my car, like texting and driving. I saw the price. I was like, this seems wildly mispriced, right? I think it launched at a $2 billion valuation. And like if you knew the L1 story, if you knew the earnings potential of this thing, if you saw the volume, if you could just like make some very basic assumptions, like it should have been a $10 billion coin and it got there very, very quickly. So if you were saying like, oh, this thing already went up, 2x, 3x, you still had a ways to go. Um, so yeah, as an investor in crypto stuff, like I kind of leave the percentage change return analysis stuff at the door. I find that it's really hard to make that stuff work when markets can reprice in such wild ways.
Darren, what's your third mistake?
Well, I guess my like third mistake is really just like ignoring. I've ignored AI and D-sized sectors, and they seem to have gained the most in terms of mindshare. Like going back to the Kaido mindshare like spreadsheet that's been circulating, and I don't know why I've been ignoring them, or I think it's the same issue as before, where I look at like what the AI agents have come to be and what they were over these past few months, and I say, there's nothing actually here. This is all just a bunch of like garbage, right? But like, other people disagree. And I'm having a hard time trying to picture why they disagree. Like at what point did it become something very bullish to them? Because from my perspective, a lot of the AI stuff, the AI agents just can't they can't do basic actions on chain, or they're just like, or the AI agents that are like around that we see doing stuff. I get this feeling that there's like some guy in the background that's just like pulling a bunch of levers and stuff. It's not actually like some all knowing AI doing anything. But I don't know. That's just my take.
Yeah, there are two thoughts come to mind when you say that. The first is the Chris Dixon essay, the next big thing will start as a toy. How a lot of big technologies, they start as seemingly like very silly things, um like I don't know, there's like this really cool anecdote of like Mark Andreessen, like he created the first browser, and he was watching like all he like literally people would just send him like, hey, I made a website, and there'd be like two new ones a day, so he would know all the websites in 1994. And the big moment for him when it stopped being a toy, to just like post, someone posted a video of their fish, people like into like, I don't know, medieval arts and crafts were just like essentially blogging about it. At the time, it was like a place for super niche interest. It was a toy. And then a restaurant posted their menu, and he was like, oh, wow. Like, okay, this is more than just a toy right now. So yeah, these AI chatbots are certainly toys today. They probably don't deserve the valuations that they should have, but um, these technologies do start out looking like very silly things just objectively.
And what's great, just to add to that, is like, yeah, even if these are toys today, the speculation and the amount of money that these toys are, the valuation these toys are getting is going to draw eyeballs that are like draw eyeballs from AI ML talent that is currently building in like Web 2 and be like, wait a second, like I have the talent to actually make something legitimate. I have a really good idea. Like, why shouldn't I come and build in like the crypto ecosystem in this industry? And I think like that is the speculation is drives attention, bad attention, and it drives good attention. And we're just like really early days, I think, for like what the future is going to unfold for like crypto and AI.
Yeah, I don't mean to disagree here, but I will. I kind of think that like crypto tends to think of itself in this weird way. Like, we think we're going to attract all this talent from like the AI space, right? Because of what we're doing with AI agents. But I think I almost want to say that like the mind share that we have to the AI space is like extremely small. Like we are it that space or that like industry of people is probably a lot harder to penetrate um, than we think. Um, that's just my like small disagreement there.
Bro, WorldCoin was launched by Sam Altman. What do you mean? But you got to be a techno optimist. Dream bigger. Just come on.
Yeah, I mean, or dream realistically, right? Like,
That's why
Isn't that your
it's
Yeah.
called a dream.
The other thing I wanted to point out really quick was the like the observation that these AI things are not actual AIs and there's like someone in the background. Um the concept I want to draw attention to is Flintstoning, where like if a tech startup says they have some like automation, like this crazy automation that they can build to, and you upload a CSV to it, like it might actually do the crazy automation that you say it will. Like someone will be doing something on the background to actually make that thing happen. It's not as seamless as you think. Um, I think the famous example is Reddit. They literally just use bots to start up Reddit. There was not enough content being posted. People weren't saying enough interesting things. So like the team and their bots went to work and like made the content happen. It was interesting enough to get the flywheel spinning. I think it's totally fine that these AI bots are not, or chatbots really aren't fully like autonomous. It's about delivering a product at the end of the day. Like I do have some issues with the space. Like I think the valuations have certainly run ahead of what's realistic. I think that there's like this interesting dynamic with the AI coins where I think they're trading like meme coins, and I think I'd be more okay with it if they were just saying that like, hey, these are meme coins, but there are actually like people on the timeline being like, this deserves a platform valuation. Like these things are going to solve problems X, Y, and Z, and they're not anywhere near that. And I don't think that the teams who have already gotten rich, I don't think that they aspire to do that. Um, if you look at some of these frameworks that have been deployed, they leave a lot to be desired. And when you try to instantiate some of these actions um, with these applications, like they don't work. They are very, very error prone. And the problem with AI in the enterprise is that you need accuracy in the enterprise, right? And you need accuracy on chain. It's very, very similar. You can't say, I want to send 20 SOL to this address and you send 100 SOL to the other address, right? So yeah, I think it's ahead of its skis. But I'm not. I think I said in the last episode, I'm bullish on I'm bearish on what exists, but I'm pretty bullish on what can be.
Hey everyone, we'd like to give a special shout out to the sponsors of today's episode, SKALE. SKALE is built different. Unlike other layer ones, SKALE is offering users a network of gas-free, interoperable EVM L1s where user experience comes first. SKALE operates like the AWS infrastructure model where developers pay for space in the network in SKALE tokens to validators. Essentially, SKALE has chain fees and not gas fees. This allows for free transactions on SKALE and has saved 46 million users over 9 billion in gas fees. Explore the gas-free ecosystem at scale.space/ecosystem and follow their journey on X at SKALE Network. Visit the SKALE Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's scale.space/research.
Ryan, your three mistakes.
Three mistakes. I have two broad ones. The first is underappreciating how important Degen capital is to crypto capital markets. Coming from a TradFi perspective, this probably took me longer to appreciate than someone that's fully crypto native. But Degen capital makes these things happen. It's still the vast majority of capital flows are people looking to do silly things on chain and take major risks and play risk games with one another. It is how ETH got started. Like if you want to look at CryptoKitties or food farms, or liquidity mining, like that was Degen Capital that got the ETH ecosystem and all its L2s bootstrapped. It's like, although the thesis for Solana is it can be like very TradFi oriented, where it looks a lot like, it's NASDAQ speed, it's high throughput, it's more product oriented teams. It was bootstrapped by meme coin trading. It was bootstrapped by Degen Capital. I think I fully appreciate that now. You can probably find some pods where I said like I don't have to try products or like know what degens are doing to like understand like the products and the capital markets here, and that's completely wrong. I think that, and although the marginal like dollar of capital coming into the space will be TradFi capital, it's still going to pale in comparison to Degen Capital for a long time, I think. So understanding, understanding what next you have to be you have to have a good understanding of the crypto natives, which is why someone might miss a DeSci trend or an AI trend, right? Like degens are making that happen. It's not like Vanek that's making those coins move. It's the degens.
This is relevant to something I spoke about on the before Darren cut me off last time. This is something relevant we spoke on the research Telegram this morning, and like when people say, "Oh, tokens don't like we don't need tokens," I think you're wrong. We need tokens because you need um people to come in and use your app. You need people to come in and fund dog shit DeFi products and random isolated money markets, which are like never going to get any usage unless you're giving out token incentives. So that's why you need tokens, and you also need tokens to bring in devs, because why would they're paying 600 grand plus equity at, I don't know about that. They're doing like 800 grand 800 bands of total comp at big software companies, unless you offer the chance to make generational wealth through a windfall to devs. They're not going to come to crypto. So Ryan, this is very tangential to your point, but I think like we need tokens, and we need I don't like the word degens. I think it's been co-opted by Vanek and stuff now, but like we need people on chain doing silly stuff, or else,
For the
like you
record,
said, like it's not.
we like Vanek. For the record,
Yeah, it's not shit on Vanek. I actually think they're the good guys, man. They're
JP
changing the
Morgan.
world.
Let's say JP Morgan.
Yeah. Okay, fantastic. What's number 2?
Number 2 is I guess this is the corollary, but just assuming markets are too efficient or at all efficient, everything that I've missed, including large airdrops, have been the result of me thinking that the opportunity is gone because it has been arbed away by capital that is too smart or smarter than me. The opportunities I think are going to increasingly exist just because, again, of that kind of like degen mentality. I thought that I participated in the Gito airdrop. It was I was shocked that it happened, and I was convinced that because it happened, crypto people would wise up and arb all those opportunities away, and that's like clearly hasn't been true. Um, and like thinking about this new administration, like I don't know, it's probably more likely that airdrops are going to be used as a like customer acquisition and retention method, because you kind of have the all clear to issue arbitrary, not the all clear, but close to, or the implied like all clear on issuing arbitrary units of value. So yeah, airdrops are probably here to stay. The market seems to be nowhere near efficient.
Yeah, it gets arbed though. It gets arbed every time. Like every time there's a Jito, it's, I don't know if it gets arbed. You still get
Need
like
6 months.
that.
Yeah.
Yeah, for 3 months, 4 months, it gets arbed, and then people are like, and then what happens is ZK sync happens, layer 0 happens, scroll happens, and people are like, airdrops are dog shit again. This isn't worth our time. And then you get one
Yep.
more. And they keep trying to fix it as well. People like protocols keep going very and interesting ways, like Tapioca. Now they've had some security issues, so this isn't me like shilling Tapioca, but they had like a options based airdrop program. We've seen Sanctum, I think, is the most controversial one, where they did some goofy reputation, but I hated that one. That was probably my least favorite one. It's so easily gameable, but I did appreciate that they were trying. So like every 3 to 4 months, like as airdrops go to shit, people also like protocols try out new stuff. It's kind of like a game we like to play, but it's fun.
I want you to expand on it more. Like, how should an
What?
airdrop be done?
I don't know how an airdrop should. I think probably linear is the best
Because
way to do it.
you don't want capital misallocation, right? Like you don't want to
You
spend your
want it.
tokens unwisely.
You want it fee based, linear. That's it. I think that's the best way to do it. Like for a protocol, I think The only issue is like people protocols take it as like when people complain about an airdrop, they take it as like, oh, like we need to like really change, like we need to come up with a new innovative mechanism to do it. Like no, no matter what you give, people are going to complain. Dude, Hyperliquid gave people what is the price right now of Hype? Let me see, like market cap wise.
$25. Oh,
Thanks, bud. Dude, Hype gave people, it's number 28. It's 8 bill market cap. Hype gave people whatever, like at launch. I don't know what it was at launch, but dude, that's not right.
wasn't it like 2 billion?
It's 8 bill market. No, it wouldn't be. Because it was 12x ago. Whatever it was at launch. Now, if you had held it, like it gave people a very, very decent chunk of money, and people were still like, "Oh, but I forgot to sign the terms and conditions. That's not fucking fair." They were trying to sue the team. So, like, no matter how you do an airdrop, people are gonna get really, really upset. I think you want to go. It's like I think in crypto in general, like we do a lot of silly stuff. I think the best ones are the ones that aren't too convoluted, like the best systems and all, like even tokens, simple token, governance, maybe fee accrual, stake for staking. That's it. Fantastic though. You don't need to do goofy shit like, oh, lock it up over here and then lock it up in this other one, and then maybe we'll give you 0.01% API. Who fucking cares? Same with airdrops. Options were relatively interesting, like from Tapioca. You don't need to get fancy with it. Just do it based on linear, based on money spent or activity. Everyone knows people can sybil it. People will sybil stuff either way. Also, most of the sybils end up being protocol side anyway, so it doesn't really matter. Like they're gonna be able to sybil it out anyway. It's not.
Yeah, the bells and whistles seem to be like correlated with like the more bells and whistles you have for the token, like the less the token, like the less product you have.
The most basic take here is that like people who can't figure out the demand side try and fudge with the supply side, right? It's like, okay, we can't like make people want to buy our token because of whatever regulatory issues, because it's not attractive, like they don't think there's a speculative side, or because it's being farmed and dumped to death. So what they end up doing is, oh, you need to lock your token in like 3 different token lockers. And like you said, it's just unnecessary convoluted stuff that's like, because they can't figure out another way. The biggest example for this is probably Curve, right? David, maybe you have a different take. I think it's probably Curve is like the most convoluted token, even though it's not that bad now.
No, I think Barachain's gonna be convoluted.
Bearchain as well. We'll see how that one works out. I don't like being bearish before a token launches, but it'll also be a convoluted one.
I guess, like, in your opinion, kind of curious, like, what is, and this is like a really open-ended question, like, what is the fair value for an airdrop? Like, how do you see,
Oh, how much should it be airdropped?
or not necessarily how much should be airdropped, but like in my head, the goal of an airdrop, or part of the goal for the air of an airdrop, at least for the protocol, is to like pay users accurately to like the metrics they got, but pay them exactly like like pay exactly what the value of that is, kind of, if that makes any sense. But
So
like
you just
for
want to
the,
make it such that it's like they never spent money?
what do you mean by that? I'm talking about
Well,
for
if
like,
you're trying to match it one by one, no, you're not trying to match dollar amount, right? You're just trying to say like, let's say they're giving out X%. It's just like pro rata distributed based on like linearly fee spent. That's what you're saying?
yes.
Yeah, that's perfect. I think ideally 10 to 15% of your token supply airdropped. A lot of money to be giving away, but I think you need to give it to the community anyway. So either do a farming program or airdrop it. Why? Why angry face, Ryan?
I was just moving a chair behind me. Um, um, what about like inducing FOMO? I could argue, I mean, I can make the argument, I don't know how true it is, but I can make the argument that Cheeto and Hype induced enough FOMO to bootstrap ecosystems,
Yeah.
right? The airdrop was big enough that it caused people to want to go there because they felt like they were missing out. now. Like there's like this weird trade-off you have, right? Where it's like you can induce FOMO, but you also like expense a huge chunk of your capital that you may not get back. So I don't know. Is inducing FOMO worth it?
So I'm gonna say to this, I definitely agree with Gito with Solana. I wrote about this back in the day. If you were subscribed to Blockworks Research, but yeah, like Gito did so much to um, start activity on Solana that like the thing is the moment you give people money, like in my mind, crypto, like we say how important on-chain users are, and then so like this I feel like is a logical way to follow it. Okay, on-chain users are very important. So we should give on-chain users money and opportunity to make money so that they keep coming back to our chain, so that we get more activity, and so that like people keep using our chain. This like logically makes sense. People work based on feedback loops, and if you can make people money on there, then they're gonna keep coming back to you, know? So I think this is what like happened with. Why are you shaking your head? No, you don't think so?
No, I think that's right.
So, and then also if you give people money, then alts pump on your chain as well, and that's when the foam was induced. You know, like when something goes 15x in a. Well, to be fair, like hype also went whatever amount in a few days, but like when something goes 15 to 20x in like 2 days, that's when people are like, okay, I need to get the fuck over to hype or to Solana and to make some money. I think that's what like ETH. That's part of the reason why ETH lost. I really don't think that like surely the gas like okay it's slower and like gas is more expensive, but it's also like there was so much money to be made on Solana. There was a whole new generation of applications that could be farmed, constantly new launching tokens, and then when users are there, devs are there. As devs come, there's more stuff to do. I mean, I don't need to explain this. We've lived this for 2024, 2020. There's people who've made this particularly fought like the Sol versus ETH thing their whole personality, so we all know it now. But
I mean, that almost makes it seem like a chain dies once all the airdrops are exhausted, right? Like,
why? But there's like a form where it sticks. Like something can become Lindy eventually. ETH. Will ETH die ever? I don't think so. Maybe in like 10 years, 15 years, if it doesn't do anything well. I still don't think so. Like I'm an ETH bull at heart. I like ETH. But I don't think ETH will die. There's just so much capital on it now that it's like people are used to it. People know how to use it. Really, the whole point of an airdrop should be like getting people to use the chain, getting people to download whatever wallet, bridge, getting people to download the wallet, learn how to use the bridge and the swap, like basic swapping stuff, as well as like few different protocols, and that's it. And then like if you can keep some of the users and become Lindy, that's the whole goal, no? Like if you think about it, what chains will become Lindy that cycle? Like Sol definitely didn't die out. No. No. What is he gonna say?
I wasn't gonna say anything. I wasn't. I mean, it sounds like David was gonna say something actually. So
I think it does imply that that you need to keep airdrop. I mean, it's Degen capital, right? It's looking for like high like asymmetric returns, often in the form of airdrops. It kind of does imply that new teams need to keep launching and pumping out new tokens to attract this fee generative capital. When is that going to change? I don't know.
I don't think that ETH is like dead. That's not like what my point here is.
That's what he's saying.
No, but it's more so like
Typical
I guess
Blockworks, man.
maybe that's like the natural conclusion. No, that's not the natural conclusion. Like it's almost like a game of chairs, right? Like, you know, we keep doing airdrops. Like we have an airdrop on like some liquid staking protocol and it's huge. And then like people go to like they go to some other chain, they start farming that liquid staking like token airdrop, whatever, right? And then like what happens then? Either another airdrop for some other protocol in that same ecosystem, or people move to the next ecosystem and farm that airdrop, right? Like, no, why do you disagree?
Or because you need to make like so. When was the last time Solana had an airdrop? Like a year ago? When was Giro? Whatever. Whatever
But
Giro was. No, like Jupe, whatever. They had a bunch of them, but like they haven't had a
Yeah.
big one for a while. And the reason that people stay on it is because you can make money on it. I don't. this is one thing that I disagree with Daniel, and he talked shit about me last time, so I'm gonna do it. Like, we can argue about activity however much we want, and like, oh, this is so much faster, man. Fees are so much lower. I don't think anybody cares. Like, realistically, people care about making money on a chain, and that's why Solana did well, and like that's what they have done well, and that's why like they haven't died out after the airdrop. So if let's take chain A for an example. Chain A does 50 grand airdrop per user, crazy. They make everybody super rich. That's already a good start because people have money to spend on the chain. But if they don't onboard developers, if they don't like if they like one thing that Tolly and stuff did so well is they would retweet every single new token that launched and every single NFT that launched, which I think is so great because it like you're giving people attention on your chain, you know, you're giving developers attention on your chain, and that's why it did well. So I think, long story short, airdrops are just one piece of the puzzle. As long as people can like long stuff on your chain and potentially make money without getting ruined, I think that's all that matters. And obviously
Low cost
yeah
matter.
yeah, obviously, like I'm just exaggerating. It does matter, but I think like the comparison between ETH and Sol is significant. But if there was an L2 that charged $0.1 per fee versus 10 cents per fees versus like Solana, which charges sub 1 cent, and you could make more money on base on that chain, on that L2 versus Sol, I don't think it matters. Do you think it matters?
It's true for a subset of the market, but like consumer and like traditional finance scale applications, they need that low cost. I don't think there's any way
Yeah,
around
but
that.
yeah, I guess. I think I'm just more like, what makes most of the fees on chain though?
I
I don't
do
know.
think
There's
that you're
something.
speaking specifically from like the Degen capital perspective, which like I do admit is, you know, on this pod is the majority of the capital in the space. But as far as positioning your ecosystem, like you really want to get those costs down.
No, for sure. And also, like, the more you get your costs down, the more like people can feel profitable on your chain. Which like it's
Yeah.
not that big of a difference on base versus on Sol, but like ETH versus Sol, like sometimes you'll buy something on ETH and you bought it when gas was $100, $150. Like that's just you can't buy random shitters the way you can on Sol on base. So there clearly is a difference, and I was just exaggerating to potentially get on Dan Smith's nerves. Like obviously it matters. I just think like making money on a chain and is more important. But obviously that also like comes with activity, which comes with low costs and higher throughput, et cetera, et cetera.
Gotcha. What were your takes?
I was gonna say these actually. Yeah, let me find them. I tweeted them out the other day. Well, not the other day. I guess the other day. The one is that I love holding on to bags, man. I have this idea, this general idea that I always say 200K, 10K, 1K, and now 100.
I
But
always say
I always
200.
say, no, but in my mind, I always say like I'm not gonna sell anything until it's 20K BTC, which is horrible to do because I've essentially missed out on rotations just by either holding down like a bag by saying I should keep 40% of this position or 50% of this position. Uh, because when BTC goes to all-time high, I can sell it for much higher. And it's just like that. You always, it's just like, I was gonna say that's opportunity cost. It's not. I'm also like down on some of them at this point because it's like the market moves by so quickly. It's sometimes just changes, and it hasn't. Do you guys know Swanson Benson?
Yes, but no.
He has a very nice saying. He says the whole space is gonna 1000x. It hasn't happened. Like we haven't hit that. Asset selection matters, and narratives matter, and like rotations very very clearly matter. And that's my biggest mistake is like I hold stuff down a bit.
That was pretty much my point on what me getting placed in Q2.
Yeah.
I pretty much went 100% into a position in December, or sorry, like early Q4 2023. It went up a good amount in leading into Q1 2024. And then I literally like held it. And I was like, well, Bitcoin's gonna go to 200K because I have a very similar price target to you, at least for Bitcoin. I was like, this thing's gonna 10x. I did some math. I was like, I don't need to rotate and like worry about and look at charts. Like, I'll be fine. And then for the next 3 quarters, the thing proceeded to retrace 50 to 60%. And I've held almost all of it. And I didn't, I had some fun capital to play with, like in Q4, but like I literally didn't rotate at all. And I agree, bag holders.
That's the big
Am I
one.
insane? Or I was just gonna ask, am I insane for like? Personally, I've always just looked at the asset kind of in isolation. Like I try not to view it relative to like Bitcoin or something like that. Maybe that works out the majority of the time, but in my head, it's just like there's a decent chance that this will move without Bitcoin moving in some direction that's either favorable or not. So I just like view everything in isolation with each other most of the time.
Yeah, that's the better way of looking at it. One thing I've been told is to sell on the way up. I can't do that. Another thing is I just can't. Like I know myself. I love the coins too much.
I
Some people
can't
don't
do
love
that.
Some people don't love the coins as much as me. I love them too much. I can't do that. Another issue is that coins always look the best when they top, and it's just like they always look the worst when they bottom. Like if you open up a chart and you look at if you look at the hype chart at 35, you're like, wow, this can only go up from here, man. Look at this chart; it looks ridiculous. And then local top. So that's another thing is but Darren, what you said is right. I think you got to treat it isolated positions and as a single trade as opposed to a cycle long investment. My second mistake is, unless Ryan, do you have anything to say to that one?
It depends on the investor that you want to be. I think there are a handful. There are many. I would say there are many things that you can hold for a long time, and you can be confident as long as you're paying attention to the story that the fundamentals will compound, and produce kind of gains over the long term. But if you want to be a trader in this asset class, you have to be glued to your screen and cut your losses quickly. So it all depends on who you want to be, and that will determine the different set of the different set of assets that you're playing in, or portfolio composition.
Portfolio composition is one that like I realized I kind of messed up. I think I made a lot of narrative based plays, core positions when I really shouldn't have. So I think that's probably a better solution than being either glued to your screen, like taking profit on those into core positions, or just treating them isolated. Is also a good way of doing it. Something I don't do. Something I should do in 2025. My second thing is chasing betas. Betas. Huge. You can never, like, you always want to do it, but you should never do it. It's like, just buy. If you're like, I missed it, dude, I think I did this with a coin that was like at 80 million. I was like, oh, it's already pumped too much. Like, I can't get into this. I'm gonna buy the 600K derivative instead. And then that coin is like a bill, maybe higher. So it's like that's like you should never. That's my like big thing. I always tell myself don't chase betas, and then it's like crack. You're like, but like I gotta do it this one time. This one time could change everything.
But gotcha. I mean, I'm sure everyone on the chat remembers like literally me in December or November, like going through periods of like pretty much just down only. I literally lost like 20% of my portfolio just gambling on beta shitters on Pump Fun. I had to delete Phantom. I withdrew I had a decent size of my portfolio on Phantom. I had to sell it into USDC. I was 99% down on it and just withdraw and move to Coinbase. And then I deleted the Phantom app and I deleted Deck Screener. And I proceeded to do this every other week for the period of like multiple weeks because I just it was like it was like crack in the 80s, like legitimately. Like I was coping because I was late to $50 million, $80 million, $100 million coins. I was like, well,
Late.
this late, right? And like I proceeded to go into $2 million literally my next screener filter was like sub $2 million filter, greater than this trade volume. And I would ape size. I would literally go for like 1 to 2% of portfolio of like of the entire supply every single time. And I just ride it to 95%.
The quickest way to lose money is to chase those. And then the thing with shitters is also like, one thing I will say about Solana is that they did so well by this like psychological operations, like nation state level, by saying like, oh, you need to ape shitters on pump.fun. When reality is you could have just bought whatever it was at 80. Like you did not need to be in the trenches or whatever. You could have just bought something at 50 mil and just wrote it up.
Wait,
There was so many
who said that? Who from Solana said you need to ape shitters at the 1 mil valuation?
The military level psychological operations is not the Solana team, but it is. We all know that it's a few professional operations running and launching these pump.fun shitters. Like we know this. Everybody knows this. We don't need to fake it and say, oh, it's all natural. Westy once tried to argue with me that PopCat was natural. It might have been at launch, but like there's an industrial team behind that. And
The streams are natural.
Yeah, that's true. Some of them.
Is Fartcoin natural?
Naturally occurring fart coin.
I can't talk about that one too much, but Zach,
why? Somebody have a gun to your head?
Oh man.
No, but like there are these Twitter accounts that will just like post P&L screenshots of like phantom wallets. Like these things are all designed to make people go online and ape shitters. Like to go on pump.fun and ape shitters. And then they prey on the young, naive people like Effort Capital to like by posting P&L screenshots so they lose 20% of their phantom wallet, you know? Like that's no, but I'm being serious. This is like nation state level psyops running. This propaganda machine is insane. And it's like it's not totally and stuff, but it is like people launching the tokens are on the Solana side. So it's not like the crime chain is a bit still the crime chain, and they're doing this, and we're not supposed to talk about it. And I think 99% of the reason why Solana did so well, it's probably because of that. And I think that's fine also. Like devs realize they can make money on your chain, so they are using every tool they can to make money on the chain. It's decentralized,
like Ryan said,
no trustless, no censorship finance. I think that's what we got to do.
Like Ryan said, the biggest, most important metric for success of chains are TPS, and Solana can crime per second, CPS.
Oh, CPS. That's crazy. You know, David, the CPS you should worry about. I've told them about you losing 20% of your daughter's university fund on Phantom, so they will be reaching out to you. I think that's it. I did all of my mistakes, which are basically just holding for too long and chasing betas. Anything else we want to say, or shall we end it?
I'll say one more mistake because I think I only got two technically, even though I yapped way too much on this podcast. My biggest like dollar amount mistake was selling a lot of 25-30% of my coin position the day before Trump won. Biggest mistake of my trading career, probably. Lost massive amounts of money by not holding that because that coin literally proceeds to go up like, I don't know, 120% or something like that within a week after. And like the writing was on the wall. I didn't believe the poly market results that he was like that big of a lead. And silly me. That was a really big mistake on my part. And I think the market was surprisingly like how mispositioned or unpositioned it was for a Trump win.
You said 25% of the position?
Yeah. Which it was right. It was the right thing from a risk reward perspective, but from a dollar figure perspective, I missed out.
Yeah, imagine if you held.
That's crazy. Keep thinking about that one, man. Maybe there's a beta that we can chase. Robinhood? Put it all on Robinhood, 5x leverage?
Don't do this to me, Picacho.
Okay, I think we're good to go. Guys, thank you for coming on. I appreciate you coming on and bearing your soul.
Thank you.
Thank you, Boccaccio.
And to our listeners, if you manage to stay through this whole thing, I will say, write down the mistakes that you made, or tweet them out, or just write them out. Write them out is probably better. Keep it personal, and keep thinking about them, and like really, really get stressed out over it. Think about all the mistakes you've made, how much money you haven't made, how much money you could have made, 10x it, and then focus on that for 2025. All right, fantastic. Thanks for coming.
Thanks again to Scale for sponsoring today's episode. If you weren't already planning to, make sure to go check out Scale's ecosystem. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network, and visit the Scale Research Hub to learn more about the gas-free architecture and growth of the ecosystem. That's skale.space/research.